Hello traders, and welcome back to Explain the Charts. Today is October 7th, 2025, and we are diving deep into USDCAD, which is sitting at a fascinating and pivotal price point. The news today presents a classic tug-of-war scenario for this pair. On one hand, we've seen the US dollar rebound, giving USDCAD a boost and pushing it towards the key 1.3950 area. However, this bullish momentum is being capped by significant fundamental headwinds. The most prominent issue is the ongoing U.S. government shutdown, which is fueling uncertainty and could negatively impact the U.S. economy, thereby weakening the dollar. This shutdown is also complicating monetary policy, as the lack of key data like the non-farm payrolls report makes it harder for the Federal Reserve to make decisions. Consequently, the market is pricing in a very high probability of Fed rate cuts in both October and December to support the economy. This dovish Fed outlook is a bearish factor for the US dollar. On the Canadian side, the picture is also mixed. While higher crude oil prices typically strengthen the commodity-linked Canadian dollar, the Bank of Canada has also recently cut rates and maintains a cautious stance. Furthermore, Canada's merchandise trade deficit widened in August, which is a negative for the CAD. So we have a situation where both central banks are leaning dovish, but the U.S. government shutdown is a unique and powerful variable creating what some analysts are calling neutrality or indecision in the market. Now, let's see how this complex fundamental backdrop is reflected in the price action on the charts. Looking at the daily chart, we can see a clear and powerful uptrend that has been in place for over a year, ever since the lows we saw back in August and September of 2024. The pair has been consistently printing higher highs and higher lows, which is the definition of a bullish market structure. However, you'll notice several candles with extremely long lower wicks, such as the one on September 6, 2024, and more recently on January 10, 2025. These are likely data errors or signs of extreme, momentary flash crash events, but the overall trend, based on the candle bodies, remains firmly to the upside. Recently, price action has been pushing towards the psychologically important 1.4000 handle. As one news report highlighted, the pair pushed above the August 2025 high, which sits around the 1.3925 level, before pulling back. This indicates that the 1.39 area is a significant battleground. Our primary resistance zone right now is the recent highs between 1.3950 and 1.3970. A decisive break above this area would open the door to a test of 1.40 and potentially the 1.4017 level mentioned in some technical forecasts. On the downside, we have a clear support level at the previous resistance area around 1.3862. This was the level of an invalidated bearish pattern, making its role as a new support floor even more significant. Below that, a much deeper support lies near 1.3721. Let's zoom in on the more recent action, focusing on the price movement since the beginning of September. Here we can clearly see the strong rally through the latter half of September that broke the previous August high. This move was fueled by strong U.S. data at the time, leading to a more hawkish repricing of Fed expectations before the shutdown began. Then, we see the pullback at the end of the month, which aligns perfectly with the news story that noted USDCAD was pulling back into a key trend line. That pullback was then met with buying pressure, and the first few days of October show a distinct rebound, which correlates with the news of a resurgent U.S. dollar. The last couple of daily candles have been smaller, showing consolidation right below the key 1.3950 resistance, perfectly illustrating the indecision caused by the conflicting fundamental news we discussed. Now, let's switch to the 1-hour chart for a closer look at the short-term picture. From this perspective, the recent bullish momentum is very clear. We can draw a distinct upward trend line connecting the lows of the past several days. This trend line currently represents our immediate dynamic support. As long as the price remains above this line, the short-term bias is bullish. However, the most recent price action over the last day has been decidedly sideways. We are seeing a consolidation or range forming, with resistance near the 1.3967 area and support forming around 1.3936. This tight range confirms the market's current state of neutrality as it awaits a new catalyst. A breakout from this hourly range could signal the next directional move. A break below the range and the ascending trend line would be a short-term bearish signal, indicating that sellers are taking control. Conversely, a sustained break above the 1.3967 resistance would suggest the larger uptrend is resuming. Drilling down even further to the 15-minute chart, we can analyze the price action for potential entry and exit points. Here, the recent sideways chop is even more apparent. The market is oscillating in a very tight micro-range, roughly between 1.3940 and 1.3945 in the last few candles. This is a classic scalper's environment, where traders might look to buy at the bottom of the range and sell at the top. For a breakout trader, patience is key here. A bullish setup would involve waiting for a convincing break and close above the immediate resistance of this tight range, potentially targeting the higher resistance levels we identified on the hourly chart. A bearish setup would require a firm break and close below the range support, which could signal a move down to test the broader hourly support levels. Alright, let's switch back to the daily chart to recap and look ahead. The key price levels to watch are critical right now. Major resistance is at the 1.3950 to 1.3970 zone, followed by the major psychological barrier at 1.4000. Key support lies at the 1.3900 level, with the more significant floor at the former resistance of 1.3862. So, what's next for USDCAD? Given the strong underlying trend, the bullish scenario seems slightly more probable, let's say with a 55% likelihood. This would be reinforced if we get positive news regarding the US shutdown or if the USD continues its technical rebound, pushing price for a daily close above 1.4000. The bearish scenario, which I'd place at a 45% likelihood, cannot be ignored due to the very real fundamental pressures. If concerns about the shutdown's economic impact intensify, or if oil prices spike, we could see a sharp reversal. A daily close below the 1.3862 support level would be a strong confirmation that a deeper correction towards 1.3721 is underway. In the immediate short term, a continuation of the sideways chop is highly likely until the market gets a clear catalyst. Keep a close eye on headlines related to the U.S. government shutdown and any statements from Fed or BC officials, as these will likely be the primary drivers. And that wraps up our analysis of USDCAD. Before you go, please remember that this video is for informational and educational purposes only and should not be considered financial advice. Trading involves significant risk, and you should always conduct your own thorough research and analysis before making any investment decisions. Thanks for watching Explain the Charts, and we'll see you in the next one.